Hey everyone, welcome back to Financial Market Insights for Traders, your trusted source for real world trading insights, explained clearly and practically. I'm your host, Sophia, and today we're diving into a topic that can make or break your Forex career: managing leverage in Forex, a double edged sword. Now, if you're getting started with Forex trading for beginners step by step, this episode is one you need to hear all the way through. Because leverage might sound exciting at first, and it can be useful, but it's also one of the most dangerous tools in your arsenal if you don't respect it. Let's jump in. What is leverage in Forex? Leverage is essentially the ability to control a large position in the market with a relatively small amount of your own capital. For example, with 100:1 leverage, you can control a $100,000 trade with just $1,000 in your account. What that means practically is you're borrowing money from your broker to boost your market exposure. Now, at first glance, that sounds incredible. And in theory, it is. But here's where it gets risky. That same leverage that multiplies your gains also magnifies your losses. Let me give you a visual. You're trading euro to US dollar. You open a $100,000 position with just $1,000 using 100:1 leverage. The market moves 1% against you. That 1% loss equals $1,000. Your entire account is gone. One bad move, one small swing in price, and just like that, you're wiped out. This is the painful reality many new traders face. They get excited by the potential for big returns and go in too hard, too fast, with too much leverage and not enough experience. Why leverage is so dangerous? The thing is, most major Forex pairs don't move more than 1% in a single day. That relatively low volatility gives a false sense of security. But when you're trading with 50:1 or 100:1 leverage, even a 0.5% market move can be catastrophic. Let's walk through a real world example. You deposit $2,000 into your trading account. You use 50:1 leverage to open a $100,000 position on US dollar to Japanese yen. The market moves just 0.5% against your position. That's a $500 loss. You've lost 25% of your entire account in one move. If the market continues and drops another 0.5%, your account is nearly wiped out. You could even get a dreaded margin call. Now, let's take it one step further. Suppose you were using 200:1 leverage. A mere 1% price drop doesn't just hurt, it decimates your account. You could even end up owing money if your broker doesn't provide negative balance protection. And sadly, many new traders find this out the hard way. Using leverage safely. Forex risk management. Now let's talk about how to actually manage leverage without getting destroyed. Successful traders don't guess. They don't gamble. They follow tested Forex strategies for beginners and beyond. And above all, they prioritize risk management. So here are some golden rules you can start applying today. Number 1, use low leverage or none at all. Just because your broker offers 100:1 or 500:1 leverage doesn't mean you should use it. In fact, many experienced traders limit themselves to 5:1 or even lower. Some hedge funds use leverage under 2:1. Sometimes, using no leverage at all while you learn is the smartest thing you can do. Number 2, always use a stop loss. Never enter a trade without knowing where you're getting out. Your stop loss should be based on your tolerance for risk and solid technical levels. Think recent support or resistance. This is your lifeline when markets get chaotic. Number 3, never risk more than 1 to 2% of your capital on a single trade. This is classic risk management. If your stop gets hit, it hurts, but it doesn't wipe you out. You live to trade another day. Number 4, focus on quality, not quantity. High leverage tempts traders to overtrade. Don't fall into that trap. Be selective. Look for strong setups that align with your strategy. Number 5, stay informed. News drives the Forex market. From interest rate decisions to geopolitical tensions, staying informed can be the difference between profit and loss. If you want a reliable resource to help you stay ahead of the curve, tune in to the Crystal Ball Markets podcast. It's packed with market news and actionable insights to help you trade smarter. Number 6, practice first. Use a demo account. Get comfortable with how leverage works before putting real money on the line. This gives you a risk-free environment to understand how quickly trades can go sideways. The upside of leverage when used correctly. All right, let's be clear. Leverage isn't evil. When used correctly, it can work in your favor. Here's how. You spot a high probability trade setup. There's a clear support level and your stop is tight. You use moderate leverage, maybe 5:1 or 10:1, to make the most of the opportunity. If the trade goes your way, your return on equity is far higher than if you had traded without leverage. That's smart leverage. It's calculated. It's managed. Common mistakes with leverage. Now, here are some common pitfalls I see all the time, especially among new traders. Getting overconfident after a few wins. Chasing losses by increasing leverage. Trading without stop losses. Not understanding lot sizes or pip values. These errors are more than just rookie mistakes. They can kill your trading career before it even begins. If you're still learning about currency trading explained in basic terms, slow down and get educated first. When should you use leverage? Timing also matters. Different trading sessions offer different levels of risk. The best time to trade Forex in your region could impact your decision on whether to apply leverage. During the London/New York overlap, that's high liquidity, low spreads, slightly safer for leverage. During the Asia Pacific session, that's thin liquidity and more erratic price spikes. Better to use lower leverage or none. Around major news releases, if you don't know how to trade Forex news with a plan, it's best to stay flat or reduce your exposure. Smart traders adjust their leverage based on market conditions, and that level of flexibility can protect you when things get volatile. A better place to start trading. If you're new to Forex and looking for a solid place to start that doesn't throw you into the deep end, I highly recommend crystalballmarkets.com. It's built for beginners with clear tools and support to help you learn the right way. And don't forget the Crystal Ball Markets podcast. It breaks down global events and how they affect the markets in plain, practical language. Final thoughts. Respect leverage or it will punish you. So here's the bottom line, traders. Leverage is powerful, but power without discipline is dangerous. If you're serious about Forex trading for beginners step by step, you need to make risk management a priority. Don't use high leverage just because it's available. Start small. Focus on the long game. Stick to strategies that protect your capital first and grow it second. Trading isn't about getting rich quick. It's about staying in the game, learning, adapting, growing. So don't gamble. Don't guess. Trade smart. And if you're ready to level up, check out crystalballmarkets.com and subscribe to the Crystal Ball Markets podcast. These are the kind of resources that can turn you from a hopeful trader into a prepared one. That's it for today's episode of Financial Market Insights for Traders. I'm your host, Sophia. Until next time, stay sharp, manage your risk, and trade with purpose.